Rajiv, it's been an extremely volatile year for currencies. Across currencies, the dollar has been gaining ground recently. The rupee has seen quite a bit of battering. How long are you hedged for? What is the level of the rupee that you're comfortable with?
No, I think this quarter has been an exceptional quarter with respect to the rupee volatility, and not only the rupee dollar, but I think cross currency volatility. I think if you look at the intra-quarter movement of rupee dollar, they moved roughly about 16%, and there was almost, if you look at towards August end, I think the rupee was depreciating by almost 2-3% on a daily basis. I think this kind of volatility we have never seen in the past, and I hope we don't see it in the future too, because this kind of volatility is not good for anyone, whether it's a IT industry or for the country as a whole, because it's very difficult to predict and run a business with this kind of volatility. Having said that, I think the rupee has settled down around 61, 62 for the time being, and I hope it remains settled at this level. Right now, as you know, we're continuing with our strategy of hedging in terms of short term. We look at our net foreign exchange assets, and we hedge up to 1 quarter. Again, the philosophy of our hedging strategy is that we want to negate the impact of any currency movement on our operating margins. So if the rupee depreciates, we would have exchange translation losses, and if the rupee depreciates, then the vice versa. So I think what we are primarily doing is to ensure that our hedging strategy takes care of the movement in rupee. But if it moves the kind of movement that we have seen in the last 1 quarter, I think it's very difficult to have an effective hedging strategy also. But I think on that front we have done exceedingly well. Our hedges are roughly about $1.1 billion as of 30th September.
Rajiv, your overall pricing, I understand, on constant currency is up about 0.9%. What are you hearing from the sales guys? Are you anticipating some sort of headway in terms of pricing? Do you expect at least some verticals to deliver better pricing in the rest of this financial year?
If you look at the pricing over the last 3 quarters, what we are reporting is about 0.7% movement in the last 2 quarters and a 0.9% on the constant currency upward this quarter. So this is kind of, pricing is almost stable. These movements would happen on a quarter-to-quarter basis depending on the business mix, the project starts and project closures, and so I think it's not, the pricing is stable. These kind of numbers that we're reporting don't mean much in terms of the pricing environment per se. The pricing is stable. There would always be one-off clients, depending on their pressures, would come and ask you for price negotiations. But I think we have done reasonably well on that front. And this whole thing about rupee depreciation, with the clients come back and ask for negotiations. Actually, no, we don't see that, because the clients usually budget in their local currency. They have approved budgets in their currency, and they would not like to link that budgets with the rupee movement, because tomorrow if the rupee starts appreciating, they would have to go back and increase their budgets. So I think we have seen a very stable pricing environment, and I don't see that changing in the near future.
Prasad, when you engage with clients, I mean, there is a view right now that Infosys has gotten a lot more accommodative about pricing. Is that correct? When you sit down for negotiations, does pricing, is it coming under pressure for some of the verticals that you're in charge?
No, I think Infosys' philosophy has always been to win business that is healthy, that's sustainable. So the philosophy itself has not changed. What has really changed is the approach that we are taking to the deals. We are taking an approach where for larger deals, where the commodity services component is higher, we figure out ways to reduce the cost of delivering the services, thereby not compromising on the margin itself, but really giving a price that is competitive in the market. And we are not, resorting to, price cutting to win deals. I think we have figured out a way to manage the differentiation. Our whole approach, even to commoditized work, is we believe that customers looking at cost for cost's sake, days are over. We are seeing the customers looking at innovation-led cost savings. So whenever we have a customer which is looking for big cost takeouts, we look at what can we do from a process standpoint, what can we do from transforming the way the service is delivered, so that the cost is not just an arbitration-led thing or a price or a rate-based strategy. It is much more comprehensive, and innovation is what actually drives the reason why we get selected. So innovation-based cost savings model is what we are taking to the market, and it is working very well. I think we've had good large deal wins this quarter, and the pipeline looks quite good, and the customers really like the innovation-led cost saving model that we are taking to the market.